Hello everyone, Andrew here from NFX Trading Academy with the next video about market structure. In the previous video, if you haven't watched it, we just went over the concepts of higher time frame and lower time frame analysis and also multi-time frame analysis. In this video, I'm going to show you how to simply mark structure on the higher time frames and when to start looking for pro trend or counter trend buys just by marking the 4 hour and going down all the way to the 15 minute. So I'm just going to take as an example Euro USD because it has been really clean in the last few weeks. What we really need to understand is that the higher time frame, and when I'm talking about higher time frame, I usually mean just the 4 hour. The 4 hour is more than enough in order to know the direction of the market. So when I'm talking about the 4 hour, we have two phases. We have the expansion and then we have the pullback phase. When we are in the expansion phase, we usually have a break of structure, and when we have a break of structure, then we can expect to have a pullback phase where we can start looking for counter trend. So it's pretty easy. So we're gonna analyze only on the 4 hour and we're gonna watch for smaller time frame inside the 4 hour legs as well. So smaller time frame means 15 minute, 1 hour, 30 minutes, whatever time frame you want to use. I usually just use the 15 minute and then I go down on the 5 minute, 1 minute and the seconds for entry. But it's always important to know which direction the 4 hour in order to know if you're taking a pro trend trade or a counter trend trade. Counter trend in this scenario is when we have a pullback phase, those sells, and we can't take sales when price is going up. So when lower time frame is bullish and higher time frame is bullish, we cannot take sales as that is just low quality setups, low percentage, and it usually is not gonna work. What we want to do instead to start looking for counter trend trades and for that pullback phase is to wait for a 4 hour break of structure and then watch the 15 minute to start switching bearish in order to enter a sell and catch that pullback. This is where a lot of traders make mistakes because they start selling here when the 4 hour is overall bullish and is just going for a new higher high, a new break of structure before potentially going lower. So this area is where a lot of traders, especially smart money traders, take losses because they only watch the smaller time frames. They want to catch trades, and of course they're not gonna buy when price is near a high. So they're gonna try and start selling, and what usually happens is that it just gets stopped out. They try selling without watching the higher time frames and the lower time frame. So us, because we are smarter, what we're gonna wait for is, first of all, if we want to take sales, we're just gonna wait for the 4 hour break of structure, and then we're gonna watch for the 15 minute in this case to switch, to have that change of character, to switch the order flow from bullish to bearish in order to take that sell. So let's find an example really quickly on Euro USD. We had a perfect example right now where again a lot of traders were selling from this area and then they just got liquidated. Why? Because look at the recent order flow on the 4 hour and the structure on the 4 hour as well. What do you see? You see higher highs being made, right? Lows being respected. This low has been respected, a new high has been made, a new low, a new high, a new low, a new high, a new low, and what comes about after that? It comes a new high. So why are people trying to sell in this area when price is obviously bullish and is heading to a new break of structure? Simple answer is because they do not watch the higher time frames. Because if you watch here on the 50 minute, for example, you see how price comes in the area and then just ranges here, so people start taking sales as price goes up, and then another stop loss, another stop loss, another stop loss, another stop loss, and then they just end up losing. Even here, price just switches a little bit bearish, but no confirmation, no real change of character, and again they start selling and they start getting stopped out, and price continues to go higher. And look what happened after price switched structure, so now it may be ready for sales. But if you look at the 4 hour, there was no reason to sell here, right? Because price was heading for a new break of structure. So us as smart money traders, we are gonna wait for that break of structure on the 4 hour before starting selling. And after the 4 hour break of structure, you want to see smaller time frames as 15 minute to start switching bearish, to have at least a change of character and a break of structure to the downside in order to take sales. Even here, you see how price came in that supply area where again people started taking sales. Why? Because 15 minute, right, gave a nice reaction and is the same area basically, but no real confirmation, and price just made a new break of structure. So what you're gonna wait for is for price to start switching bearish. In this case, you have multiple scenarios. First of all, you can wait for a 4 hour change of character, which currently just happened right now. You can see it here on the 4 hour. We took the high and we took the high and then we took the low right now. So we have a confirmed change of character bearish. Now that doesn't mean that price is gonna go bearish. So that is when the lower time frame comes into play as one of the confirmation. If we start looking at the 15-minute bearish order flow, you can notice it right here. Ever since we made this high, price started going bearish. You see the lower lows, lower highs, lower lows, lower highs. We tested this supply area and then price made a new low right now. So we made a new break of structure. So what we can expect now is again to have a pullback. Now I'm saying price is not yet ready for sales due to multiple reasons. First of all, I want to see a sell setup during a potential reversal time. So reversal time means when a session starts, so New York or London. And also I want to see liquidity being taken. Even if on the 4-hour we made a change of character, this can be a fake change of character and price can just make a new high. So this is where multi-time frame analysis comes into play, right? We have a 4-hour pullback. We have 15-minute order flow. Now we want to see the next session and the next session to see if we can potentially catch a sell. For that reason, because now we just made a 4-hour change of character, we may have a retracement. So we start looking at the time frames and let's see what we can find. Basically here we had a 1-hour change of character and then the mitigation. So this was a nice sell. Now what I want to see is price to have the pullback phase. So this works also on the 50-minute, what I showed you before on the 4-hour. This is also valid on every time frame, even on a 1 minute, for example. So what happened right now is price made bearish structure, right? You can see. So after a new low being put in the market, what do we have? We have a pullback phase. So we make a new low right here after making a break of structure. For example, here we do have a pullback. So this is what we can now expect in order to take sales. So a lot of people tried selling all this area, started taking losses without waiting for proper structure on the multi-time frame analysis. So now what we want to see is price to start pulling back, see which area it can come to, because it can come to this area, you can respect it, it can come to this area right here, it can even come to this area right here, or even take the Asia high. We don't know for sure. So that is why multi-time frame analysis is really nice. We do have some confirmation for sellers now. We have the 4-hour, the 1-hour and the 50-minute. Now we want to see a pullback phase and also a session time in order to take a sell. What I want to see is price on 50 minutes switching bullish again, and then once we reach an area, because again we don't know which area is going to react from, let's say it's going to react from this area, and we notice a change of character on the 50-minute because it's still counter trend. We want to see the 50-minute in alignment with the 4-hour and 1-hour bearish, right? Once we see the 15-minute again and price coming on the smaller time frames. So now this is the point where we start looking at the smaller time frames as well. So 5-minute and 1 minute. And also a big confirmation for me is I always take trades during session times. The first hour of London, first hour of New York, that is when reversal is usually going to happen. So if we, for example, we have this change of character on the 15-minute before London Open and price starts going in this area that we created before London Open, and then I see some 1 minute confirmation, like 1 minute charge, then that is a good trade for me. I'm gonna take a sell from there. Why? Because first of all, higher time frame has a line, is a pullback. It was confirmed because we had a 4-hour break of structure. We also had the 4-hour bearish change of character. We do have a retracement. 15-minute has went bearish, just going into a pullback phase. And once I see confirmation on the 15-minute, the 15-minute to be aligned bearish again. We can see that with a change of character is not that hard. Once we see that, then the next step is price to mitigate and just watch for the 1 minute for additional confirmation. And the last confirmation is if it's during a session time. So if it's London Open or New York Open, we can safely execute a trade and make some easy profit. This is a really good setup that I personally like to take a lot. So even if I get stopped here and then it's just a stop hunt, price takes liquidity again and then gets another charge, then I will start looking for the same thing in order to catch that sell. This is where people don't have patience. They do not wait for the multi-time frame analysis to switch in a certain direction. They just start taking sells once they see like a 1 minute or a 5-minute change of character, which is completely wrong. Because if they look at the 4-hour, if they look at the 4-hour right here, for example, in this area, they're gonna notice that the previous 4-hour was really bullish. There was no structure for sales, just a bearish candle. And guys, just remember this: a bearish candle does not mean a bearish trend. And one bullish candle does not mean a bullish trend. You need to have multiple candles, and this is what I mean by structure. You need to have multiple candles printing in your direction in order to take a trade in that direction. So this is not a confirmation, this is not a confirmation, right? Even here for buys, this is not a confirmation. Here for sells is not a confirmation, right? Even here for buys is not a confirmation because look at the previous candles, right? So this here also is not bearish confirmation. This is not bearish confirmation. This is bearish confirmation, right? Because you watch the candles, you see the 4-hour change of character. Structure is slowly aligning bearish, and now we can start looking for sells. Until then, price was bullish and there was no reason to sell it, and just look how it just topped out everyone. And this mistake I see happening in every single trader, because they do not have patience, they do not watch the higher time frames, they just want to take trades and make profits. So instead of selling here or here or here, it's better off just going with the trend and buying until you see the clear confirmation on the 4 hour. And it's pretty simple to understand that, because every big move starts from the lower time frame. Every big move on the 4 hour, even this move right here, it all started from the lower time frame, especially since price is getting ready for an expansion phase. So we have expansion, we have pullback, and now price is getting ready. You can also notice that on the smaller time frames by seeing 15 minute getting in line, preparing for that buy, taking the buy, clearing the high, and then maybe look for the pullback as well if the lower time frame align. Lower time frame, 15 minute down. So it's that simple, guys. This is not any magic, just hard work. You need to understand how price moves, you need to understand structure. Market is not all structure, market is structure and liquidity, but we're gonna talk about liquidity in a future video for sure, only if you enjoyed this. I'm gonna make 2 separate videos for liquidity as well if you wanna see that, and if you enjoyed this one. So if you enjoyed this video and it has helped you, don't forget to like, subscribe, and leave a comment down below, and I'm gonna continue to provide free information for everyone here on YouTube. Don't forget to join the free Telegram group, and I'll see you guys in the next video.